Hey, good afternoon, everybody. It's Mike. It is Thursday, the 11th of June, and it has been a ugly, ugly day in the markets, and I hope you guys are all doing well. So let's start off with the obvious, guys. All week long, I've been talking to you guys about how hot and overheated this market was, and while it could keep going up, that it was time to be careful and to be cautious about it. We came into yesterday, we knew we had the Fed. I came in, I have just two Kraft Heinz calls left, which are very, very red and probably in deep trouble, but I have a month. And I've traded cautiously around the action. The Fed delivered yesterday and the market sold off on Powell. So one thing I would like to teach you guys about is this. One thing I've noticed the last three times the market popped on the Fed decision and then sold off on Powell, we have gapped down huge the next day. So when Powell speaks and the market turns red on a Fed day, it means that we're going to go down the next day. So we lesson learned. What happened now here on the SPY is first of all, we have big volume today, right? You can see we have distribution volume. We're over 150 million shares, a half an hour to go. We have created now an island top. What is important about this? Well, it was this island bottom that kept me uber bullish on this market. Why? Because this was your first move, right? You look at the bottom, that gap up, and then everybody thought we were going to fall apart here at this point, and we didn't. Instead, we created a gap down, we created a gap up. These candles on toss are bad, and we ran off to the races since then. Another big gap here, and we created all these gaps, and we trapped everybody. And despite the market being incredibly overbought, incredibly hot, we could not cool off. We wouldn't come in, and now here we are. We're down. Look at the oscillator this week from plus 340 something, now down to negative 100 here. Okay, big move down here in the oscillators. So what do we do today? Well, we gapped down below the 8-day, the 8-day coming down hard now. We created this island top where we gapped up, we trapped the bulls for 4 sessions. We sliced right through the 21-day, and now we are below the 200-day. So what does this mean? This means is you should be out of most of your longs. I always teach you guys, when you break the 8 and the 21-day, you get out. This morning when you woke up, that was your decision point. At this point, when you cross the 21-day, that was your next decision point. Here we are breaking the 200. Where do we go from here? Nobody knows. I will say that, we're down 7% today. 291 is a 10% pullback in the correction in the markets. The next area for me, you start to look down towards this 293 area and the 1.8% retracement. Why there? Because that was resistance and support. So that makes sense that if we pull back there and held there, it would be good. Any predictions for tomorrow, Raul? No, none. In a perfect world, what I'd like to see tomorrow is we gap down and we reverse hard and we take back yesterday's low and we get some nice long setups. But my prediction for tomorrow here on this market, there is none. The selling today has been extremely methodical. You can see there's no big down volume moves here. When you look at the Qs held in better all day. Okay, even though we're down, you can see the Qs haven't even hit the 21-day, never mind the 200-day. So what's this tell us? There's a lot of strength out there in the Qs. There's strength in tech. If you're asking me where we should be looking today, here, you should start making your shopping list. Mine will remain in the tech-heavy area, because if there is a wave 2 coming and the media is hyping that, that's where you're going to want to be. So for me, when I look out here today and I look at this market, I say, okay, Apple, what have you done? You just pulled back to the 8-day. This is a good spot if it holds here to watch it. Microsoft, what have you done? A little below the 8-day, but holding up okay. Square, below the 8-day, but holding up okay in this market. PayPal, holding in okay. Amazon, holding in okay. All right, down to the 8-day, but holding in. All right, not so bad here. Plenty going on. What else can we talk about here? God, I'm thinking, guys, I'm just trying to come up with ideas. Zoom today was strong most of the day. Couldn't hold, but put a new all-time high in. Doku. These are the stay-at-home trades coming back in. We talked about the chip makers. NVIDIA, even though weak today, not falling apart. AMD, not falling apart, although that's a little ugly now. Back on the 50-day. What do we know about AMD? The 50-day, this thing loves it. It either loves it for support or resistance. If it keeps holding that, it remains strong. So it's about time to keep watching these, keep an eye on these. The stronger names, watch the service area, the cloud, the stay-at-home plays, mRNA for the virus uh, vaccine. You also have names like J&J. Okay, these also could possibly come into play. Bottom line is, it's a time to be careful. What did I do today, guys? I made money trading TQQQ a couple times today, nice money on that. I played it on the bounce and on the open. I made a little bit of money trading Roku today on the open, got stopped out, then it popped, missed the bigger move, and I traded Microsoft flat, in and out on options out of a penny. You know what? I'll take that today, up more than enough today, and we'll see what tomorrow brings, and I hope everybody's doing well. And please be extra careful here. You don't need be the first person out of the bunker. You don't want to get your head shut off. Let the market prove it now.